You want to make an easy million? I figured it out. I'm going to tell you exactly how to do it. Let's start with one of the most important numbers to make this happen, the average home price. The average home price today costs $278,621.25. Let's say you buy a house for that exact price. How much will you actually pay for that home with a 30-year mortgage? And how much will it be worth when you're done making all the payments? Is it better to take out a home mortgage versus rent versus being a landlord? I spent a lot of time getting familiar with my calculator over the last couple of days, crunching numbers that you're likely not going to find anywhere else. I think you'll like what I have for you today. So let's get started. For those new to the channel, welcome to the Income Series, where we discuss all things finance, business, and investing. I'm Brian Clark, living down here in beautiful Puerto Rico. I previously had a career as a nurse anesthetist that I left after starting several online businesses. Now I come on YouTube to share how I achieved financial independence, talk about the new ventures I'm doing, and share the things I'm learning along the way. I want to give a big thank you to all of you for always tapping that like button and sharing your thoughts in the comments section below. You know, we are doing this for more than just the YouTube algorithm. We are trying to create a community here where we really help each other. If you haven't yet, turn that like button blue. Videos like these that bring original value take a lot of work to put together. Now, there has been a mix of advice on the internet about if you should buy your primary residence or rent. Grant Cardone is well known for saying you should rent where you live. You would think, since he's known for buying real estate, he would want you to buy your home. Honestly though, some people believe he says that out of sensationalism and to get some additional media attention. Other YouTubers, like Graham Stephan or Meet Kevin, have built their original wealth on buying and holding properties, including their primary residence. Now, Graham Stephan carries a lot of clout in my book. If I had a little spirit leprechaun on my shoulder whispering financial advice in my ear, he'd look exactly like Graham Stephan, but just maybe 3 inches shorter. Or taller, I don't know. I've never met Graham Stephan in real life. Well, regardless of what anyone says or has done, the numbers don't lie, and that's what we will be covering today. Now, most people are a little uncertain when it comes to buying their first home, and for good reason. For most of us, buying a home is the largest single purchase we will ever make. So there are a lot of factors and emotions that go into that first purchase, and being abundantly cautious is completely normal. I don't think anyone would fault you for having those feelings, but today we are going to find out if that fear of uncertainty has prevented you from making a good or bad financial decision. Now, housing markets across the country vary quite a bit with regards to the average home price. I think it's safe to say we all know that housing prices in Little Rock, Arkansas don't compare to those in Southern California. But the average home in the country is currently sitting at a price around $278,621.25. Even if the average home price is significantly different than where you're at, I don't want you to worry. The numbers I'll be sharing today will still be very telling on whether you should buy a home. Now, when buying a house, there are a ton of expenses that go along with it, much more so than what renters usually consider. And even homeowners often don't pay attention to these. And many of these costs are considered to be what's called unrecoverable expenses. Unrecoverable expenses are basically services or goods that can't be resold or refunded, also known as sunk costs. So let's talk a little about what these are. Currently, most people only put down on average 6% of the purchase price when buying a home. Now, this means they need to borrow the rest from a lender, and interest needs to be paid on that money borrowed. If the house costs $278,621.25, the average down payment would be $16,717.28, leaving a mortgage amount of $261,903.97. From this, over a 30-year period, you're looking at spending $188,299.09 just in interest on that loan. This will likely be your largest sunk cost when purchasing a house. Also, since the average person isn't putting down 20%, they are looking at having to buy what's called private mortgage insurance, or PMI. This is generally priced at 0.5% of the home's value a year. Now, you don't have to pay this for the entire life of the loan. Once your remaining mortgage makes up 80% of the purchase price, you can request to have it canceled. or it will cancel automatically once the remaining mortgage makes up 78%. In total, you'll end up paying around $9,603.15 for a PMI on a house at this price with 6% down. Another unrecoverable expense will be property taxes. Property taxes sit around 1% of the home's value in general. An assessor from your county will come and evaluate the value of your home. Now, this usually comes out a little lower than what you paid. Even though average tax is for 1% of the home, it's often closer to 0.9%. And for a home at the price we discussed, taxes should end up around $83,586.30 total for the 30 years of ownership. If you thought we were done with sunk costs, sorry to say, but you'd be wrong. Home insurance hovers around $100 a month, making about $1,200 a year. Now, this can get really high depending on where you live. If the house is in a flood zone or in a place like here in Puerto Rico where hurricanes can destroy all your stuff, you can expect it to get up to twice that. There's still yet another unrecoverable expense we need to discuss, and this is repairs and maintenance. The general rule is that repairs cost roughly 1% of the home's value a year. I did the math, and if the house appreciates at the current market average of 3.75% a year, the average yearly spend of repairs and maintenance on the home will be roughly $5,596.55 a year for the next 30 years. This comes in at a total of $167,896.50. This will likely be your second largest unrecoverable expense after the cost of mortgage interest. So after all this, you can now add up the total cost of purchasing and maintaining the home for 30 years. Now, when you add up all these expenses together, along with the principal pay down of the house itself, it comes out costing you, drum roll, $764,006.29. Yes, you heard me right, almost $765,000 in expenses, the majority of which are unrecoverable. This is a far cry from the original $278,000 price. But what really matters here is the amount of equity you'll have in the home. To find out if you came out ahead, you need to know the new value of the home 30 years later. Well, if the home appreciates by 3.75% a year for a total of 30 years, the value of that house will be $840,731. Aha, you came out ahead. It turns out you'll make a profit of roughly $76,724.71. So how does renting compare to all of this? Well, we already discussed some of the benefits of renting that are not monetary, but we need to really crunch the numbers and see if renting is a good or bad idea from a wealth building scenario. Let's say you're a renter and you have the same amount of money as the down payment amount for the house, the $16,717.28 in the bank. But you decide to invest it in the stock market instead, with an average compounded annual return of 8%. And without making any additional contributions, you can expect that to turn into $168,220.25 over the course of 30 years. Now, we need to calculate how much you can expect to pay in rent over those 30 years as well. I'll be starting out that rent at about $100 below what the mortgage payment would be for that $278,000 house, that rent being $1,600 a month. Rent on average goes up 3 to 5% a year, but for this scenario, we'll be conservative and just put it at 3% over the course of 30 years. You can expect to pay $913,450 in rent. That's almost $1 million in just rent. Now let's subtract the interest made in the stock market from the total cost of rent, which gives us a net loss of $745,229.75. Okay, so now that we have all the numbers, we can easily figure out if buying a house is better than renting. So purchasing a home will result in a $76,724.71 profit, while renting a similar type home will result in a $745,229.75 loss. This makes buying an average home $821,954.46 more profitable. I used to sit on the fence about buying, worried I wouldn't be getting a great deal. Now I realize that getting a great deal is not nearly as important as getting in a house. Even if you overpay by $20,000, $30,000, within a few years it won't even matter. In fact, the longer you own the house, the less risk you take on with market fluctuations. As long as you can handle the mortgage payment, I'd say get into a house in as good of a neighborhood as you can. I also want to talk to you about buying several properties. How profitable is it to be a landlord? It's clear to me that if you purchase a few properties, you can likely reach a net worth of $1 million in under 10 years. Think about it. If you held that house as a rental the entire 30 years, you'd get that $913,450 in rental payments, plus the $76,724.71 in profits from the equity, for a total of $990,174.71 in profits. I think it's a really good goal to own your primary residence and at least 2 rental properties. I mean, think about it. Retired people that have this seem to live pretty comfortably. I'm completely sold on the idea of buying and holding properties. Fortunately, I personally have the cash flow right now to take on a mortgage or two and not have to worry. And I'd recommend to think about keeping any home you buy, even if you're planning to move somewhere else. My wife and I will be traveling to a couple different cities over the next few months and be deciding on where to buy a house. While we live here in Puerto Rico, I'm not as confident in the housing market here. Obviously, we want to buy in a city that we like, but also one that has a growing economy and a growing population. If you guys have some recommendations on cities, or if you have experience with owning rentals, feel free to mention them in the comment section down below. This video took me several days to make, so if you found value in what we talked about today, turn that like button blue. If you haven't yet, become one of our new OGs. Click that subscribe button. Feel free to explore some of my other finance videos. I've got a really good one about fixing your credit score, and you guys have a great day.